also well above revenue forecast, about 10% above for the month of August, and today about 15% above. And I think the word on price is volatility. There are just so many factors that are playing into world oil prices. But when we get over there, I want to talk about the lack of oil in storage worldwide and in the U.S. Interestingly enough, really essentially zero increase in natural gas production from July to August. I mean, just the slightest bit, but less than 1%. And so you're going to see it in Justin's gas oil ratio curve, but the gas oil ratio actually went down. And again, I talked yesterday to the Western Dakota Energy Association, and I commented that out of today's 36 drilling rigs, or 30, well, as of yesterday, I believe it was 36 rigs. Today it's 38. Out of that number, 20 or 21 of those, two-thirds of those rigs are operating out in the tier 2, tier 3 geology area. So again, that's what's playing out to yield the high oil production numbers and the very flat gas production numbers and the great gas capture numbers that we see. So jumping to wells permitted, we got a healthy inventory of permits that are getting processed, but wells completed was way up, and we saw a large number of frac crews working. If you recall, we had 21 frac crews working last month when we had the director's cut, and that plays out in the 129 completions that we saw. But when you look down at wells waiting on completion, we're now down to less than 400. 376 wells waiting on completion, and that's just a normal inventory of wells that are moving from drill to when a frac crew can move in. So we saw the number of frac crews decrease down to 14, which is a healthy number and easily capable of keeping up with 38 rigs. So we're not going to fall behind there, but I think it's important to note that the duck well inventory, which is, I think, largely responsible for this large production increase that we saw in the month of August, is depleted now at this point. And there's few to no true duck wells left in the inventory. There just is the normal processing time that's built into the time between drilling and completing. Record number of new wells. I already commented on the drop in frac crew. Let's look at the graphs of where we're at world oil demand and supply numbers. And I don't know if Justin's going to get into this, but we've got 3 graphs that we like to present you with on a monthly basis. The first one deals with U.S. storage. We are absolutely at the low point in terms of 5-year average. So non-SPR storage is as low as we ever would want to see it. You can see a few times in the past during COVID, and as we came out of COVID, we actually got below that 5-year average, and that always results in significant price increases. When we look at the world supply and demand curve, it's actually being undersupplied with the OPEC restrictions and OPEC plus Russia restrictions on the market. The volatility, what's going on in the Middle East, is highly likely to take some more oil off the market. So we may see Saudi Arabia and Russia retract on that, but not until we get into the high 90s in terms of Brent crude. So we'd probably have to see a $10 a barrel increase before they would act to provide some relief to the market. The interesting thing, as Justin pointed out yesterday, and he's not looking at me, so I can't tell if he's going to talk about it, but is that the International Energy Agency and the Energy Information Agency came out with new forecasts yesterday, and or the day before, and they are predicting no decrease in liquids demand between now and 2050. So out through 2050, they're predicting that the increase in energy demand around the world is going to be picked up by renewables, but there is going to be no decrease in liquid fuels or liquid hydrocarbon demand for the next 30 years. meaning that North Dakota's got a strong market for our plans or our vision of increasing production to 1.4 million barrels a day and the need for enhanced oil recovery to sustain that. The other thing I want to point out, right next to world oil demand, you can see what has happened to our strategic petroleum reserve. And so when you match that up with where we are in the private storage, you can see that we are extremely low in terms of storage. We're very vulnerable to any kind of production interruption anywhere around the world because the world is supply demand short. The U.S. private storage is at 5-year lows, and the strategic petroleum reserve is at a 40-year low. So the word to think about there is volatility. We're going to see crude oil prices and gasoline prices jumping around, I think, a whole lot as the unrest in the Middle East plays out, and as we see the economies around the world try to deal with inflation, recession, and all of that going into winter. I had the great fortune to be able to sit down with one of the board members from the Federal Reserve this week when I was in Minot, and their focus really is entirely on the continuing high inflation numbers. And so the anticipation is that at some point between now and year end, we're going to see additional increases in interest rate in order to try to bring those inflation numbers down. They are really walking the tightrope. If they increase interest rates, there's a lot of danger that drives us into recession. And so oil prices respond to all of these things: storage, supply, demand, inflation, recession. And so we're going to see the market trying to guess a lot about where price ought to go and quite often missing it. But as it stands right now, North Dakota's revenue forecast is incredibly strong, and the revenues are coming in well above forecast. And so, it looks great as long as DAPL continues to operate, and there'll be some conversation around that as well. I do want to talk about the fact gas capture held very strong, and 2 of our 3 problem fields are very close to meeting the Commission's gas capture requirements. They're at 90% versus the 91%. So even with the increase that we saw in natural gas production, the slight increase and the strong increase in oil production, industry very, very disciplined about gas capture. And I think maybe the reason production increases were a bit lower earlier in the summer and then came on so strong in August was some major gathering infrastructure that was being constructed was able to come online in August and allow for duct wells to be completed and production to be brought on and for that gas to go into gathering. So very, very disciplined in terms of gas capture, also about capital deployment and rig count and completions. I think the word for the industry is discipline at this point. They're in the process now of writing their 2024 budgets. So as we talk next month and in December, I'll certainly get a lot of insight when I have my planned trip to Houston in February as to where they're going to go with their 2024 budgets. So let's keep a close eye on that. I think the 2 big risk factors in terms of price and production, what's going on in the Middle East, what that might do, and then DAPL, the comment period for the Dakota Access Pipeline ends November 13th. That doesn't mean that an EIS is coming out November 13th, but North Dakota is really watching that since it carries nearly half of our production. And so that's a significant risk factor that's being built into prices and into production, along with the concerns about what's going on in the Middle East, and then what's the Fed going to do with interest rates. So we got three big factors that are trying to move oil prices in opposite directions. And if those get out of balance, we're going to see some pretty big volatility. Nothing really new to report on the federal rulemaking front. North Dakota has filed comments by the deadlines on all of the rulemakings, and the remaining ones, I guess, are coming up. The Dakota Access Pipeline, November 13th, and then I believe, is it the no, the NEPA rule we already filed. So the next step, the NDIC versus Department of Interior on federal leasing. There is a court hearing scheduled for October 23rd in Grand Forks, North Dakota. So some of us will be making the trek to Grand Forks to be on hand for that court hearing, and that will be the latest update required by the federal court on the status of leasing in North Dakota. We're processing or assessing right now, evaluating the proposed lease sale for December. And as it stands right now, they're only planning to offer 14 parcels. Some of those are some high priority North Dakota parcels. So there's a little granule of good news in there, but we're fully assessing how they arrived at what they're deciding to do. A lot of parcels that were proposed are being determined to be unavailable by the state director. And so we're going to dig into that and see what the basis behind that is. But they continue to lag way behind, in the days of a lot of Bakken activity, we would see 3 to 4 dozen parcels being offered, and we're looking at a third to a fourth of that in this environment. And so the federal government continues to dampen down activity in the oil and gas business. And with that, we'll take some questions.
Okay. So a couple of questions we have here. The first one is, what are you seeing regarding permit activity, if any?
Yeah, so permit activity is pretty strong. In September, we issued 59 permits. We're seeing average 75 to 100 permits filed per month. We are going into the slow period, so there was a lot of permitting activity leading up to the winter season, but we're nearing the end of the construction season for new pads. So we've implemented a new policy, a new way of approaching this, and that is that for a multi-well pad, we're only requiring 1 permit. That's going to save a lot of time on the part of companies, operators, and on the part of the agency. We should be able to get those permits out the door quicker. We're still requiring them to tell us how many wells they're going to put on the pad, but we're just requiring a single permit in order to allow construction of the well pad. The norm is that for a pad expansion or a new well pad, it's 5 or 6 permits, and we're just requiring 1 before we'll actually process and issue the permit. So a healthy level.
We have 3 more questions.
Mm-hmm.
So is the producer sentiment still status quo for flat production? That's the question.
I think I would describe it as very disciplined, and that is that they're keeping their eye on the gas capture ball and on being very cautious with their capital deployment. As you saw this week with the massive acquisition that ExxonMobil made of Pioneer Resources, a lot of capital is being deployed into mergers and acquisitions, into stock buybacks, and also into dividends and returning capital or return on investment to the private capital folks. So I don't know that I would call it flat. I would just say very disciplined. And our operators are still talking that 1 to 2% growth year over year.
We have another question that says, what are your thoughts on reaching 1.2 and will it be sustainable? That's part of your beginning when you started.
Yeah, great. So I think we were excited to see it. We were predicting that we'd get there by the end of the year. And so this is a little quicker than we thought we would get to 1.2. We see today 38 rigs running and 14 frac crews. So should be pretty easy to sustain that and actually grow it through the end of the year. Now that's making the assumption that we're not going to get 4 blizzards in November and December like we had last year. That always, causes an interruption. But in terms of the infrastructure and the ability, we'll actually see a little bit of growth, I think, between now and the end of the year.
And the last question they have here was, when was the last time we were at 1.2?
And that was in November of 2020. So it's been a long time. And I know during the legislative session, not that many months ago, 8 months ago, people were questioning whether we should even be looking at 1.1 million barrels a day and whether we could sustain 1 million or more. But again, it is amazing to me that with a rig count of less than 40, that industry is growing production by 20% year over year. And so we had a lot of pent up duck wells. I think that's how we got to 20%. We're not looking at that year over year out to the future. We're looking at more of that 2% number.
Yeah. That should be it with the questions.
All right. Anything from you?
Yeah, I know you just touched on it a minute ago, but with the ExxonMobil purchase, what beyond sort of like the producers you said are sort of expecting the same things, but do you think there's going to be much of an effect on North Dakota production, North Dakota supply, anything like that?
Yeah, so the question was, how does a major acquisition like that potentially affect North Dakota supply? And one of our concerns has been that the ExxonMobil subsidiary, XTO, in North Dakota, has the largest well inventory potential in the core area in North Dakota. And they have not had a drilling rig operating since COVID. So they've been just exploiting their inventory of duck wells. That inventory is gone now. And so a little bit concerned that an acquisition like that, which is Permian focused, might tend to pull capital away from that core area drilling in North Dakota and lead to really flat to declining production in the core area in North Dakota. XTO sold all their tier 2, tier 3 acreage. Cord picked that up, and so that's going to get developed. They're respacing all of that into 3-mile laterals and very actively going to pursue that next year. But they have the largest inventory of tier 1 core assets, and something like that merger is going to tend to pull capital away from that. So it may delay some of that development in the core area, which just means slower growth in North Dakota, but it's not necessarily all bad. They haven't talked about walking away from North Dakota, but it could certainly delay development of some of those tier 1 assets. So we've been having some conversations with the ERC about that, and we're really anticipating. We think North Dakota is one of the front runners, and we have some really strong private companies that are engaged, and so we're anxious to have that happen and line up those private companies because it's going to direct us as to where to go with our salt cavern research well. Never any guarantees, but we're very optimistic that North Dakota is going to be one of those, and that we've got some strong private partners that are going to get on board with that, and so we'll have some exciting news about moving forward in the hydrogen realm. Yeah,
I think you mentioned this before, but the reasons why they're drilling outside of the core area, going to the tier 2, tier 3 areas, what are the reasons for doing it?
So the question was, what's the reason for the migration out of tier 1 into tier 2? Probably the number one reason is that high gas oil ratio in the tier 1 area. It's about 90% drilled up. So there's only about 10% of the potential drilling slots left in that tier 1 geology, and the gas oil ratios are very high. And so with the development of the ability to so easily and for very little incremental cost drill 3-mile laterals, and the performance of some of the new completion technologies, the tier 2 geology is performing just as good as the tier 1 was. And so the incentive has been very strong because of the low gas oil ratios and the high well IPs and the economics out there to go drill 3-mile laterals in tier 2. It's actually more economic in terms of infrastructure and capital deployment. So it's exciting news, and we think ultimately that's going to spill over into the tier 3 geology. We see 1 or 2 rigs working out there, and some leasing activity. Folks are seeing landmen and getting leasing offers up in Divide County, and been a long time since that was happening.
When you started at DMR, did you ever think there would be 3-mile laterals?
Yeah, great question. When I started at DMR, did I ever think there would be 3-mile laterals? And no, not in my wildest imagination. At that time, we were incredibly impressed that they could punch out a 1-mile lateral in Cedar Hills field, and they were able to do that with really, and it sort of sounds like a joke, 20th century technology, but they were relying on the rock to actually keep the bit in zone and try to drill straight. And so when we look back at that, it seems really crude. Good pun, huh? It seems like really crude drilling technology. So no, I wouldn't have even imagined it. And I think we need to, sort of take our glasses off once in a while and think about where this industry is going to go technology wise. But the 3-mile laterals and the completions are really fantastic, and they're going to be great for North Dakota. Hasn't spilled over into the other basins yet, as far as I can tell, but I imagine that it will. When you look at some of the work that the EIA puts out, you can see that our productivity per rig is probably 50% higher than the Permian productivity per rig. And so I would imagine that what we've developed here is going to spill over into the Permian with time. Thank you.
We have Justin Kringstad from the Pipeline Authority.
You're ready to go? Okay, well, good afternoon, everyone. Justin Kringstad, Director of the North Dakota Pipeline Authority. We'll get started off. A little lacking some of our neighboring states as far as production information. I suspect, though, fairly consistent numbers, well over or approaching that 1.3 million barrels per day region-wide. When we look at our crude oil infrastructure, the month-to-month changes, the one thing that I will note is the decrease in GOR in the months from July to August. And looking at some of Lynn's preliminary information, it really lines up with what the science would suggest we see, with 91 completions in August, a high number of well completions in those tier 2 areas. The GOR is lower from the get-go, so that is going to influence those numbers. And then also looking ahead at the preliminary September completions, I wouldn't be surprised if we're here a month from now and see, again, depressed or or steady at the most, GORs between August and September. A little bit of a shift in movements for crude oil out of the region, a little bit of an uptick in the trucking traffic up in north into Canada. When we look at slide 5, there we go. Perfect. Thank you. So when we look at just the overall trends, consistent with what we would expect, that Brent WTI spread sub $5 is kind of, again, hovering around that line, but we're continuing to see those elective barrels remain on the pipeline as opposed to some of the rail movements. As we look at slide 6 and what the refiners were paying around the U.S., that highest price over in that PAD 5 region, PAD 4 and PAD 1 being those other two coastal markets. In a moment, we'll take a look at rail movements out of the Williston Basin, up just a hair from July to August, and then the destinations continuing to dominate over to that Pacific Northwest. And if you think back a couple of slides, you had highest prices in that PAD 5 marketplace. You'll see later in my discussion about some of the refinery utilization being at healthy levels up in that Pacific Northwest level. We have seen some softness or weakness in the refinery runs over in the East Coast. So pricing, soft refinery runs. We've just seen a lack of movements that direction out of the basin. Pricing on slide 9 as of today, that Brent WTI spread now a little bit softer, just over $3 per barrel. Still very strong Midwest pricing. Clearbrook $1.78 as of yesterday, and then down in that Gulf Coast, there's a number of markers we could be using here, but just LLS for consistency, just over $2.20 per barrel. This was what I was referring to, just a very, very slight uptick in exports. Again, not substantial compared to what we've seen in the past, but again, just for full accounting, we certainly are keeping track of that. Flaring numbers, consistent 1% from wells that are unconnected to gas gathering systems. Remainder of that challenge remains the sticky challenge of minimizing flares from wells that do have a pipeline connected to them. I'll skip through slide 12 and then slide 13, just on the pace. Again, very, very strong. This is exactly what we would hope to see. Right on pace. Number of new wells selling gas, new wells producing gas. We want to see those numbers hand in hand, and we're continuing to see that. The EIA on slide 14 has increased their expected oil prices here with their oil price report that came out this week, getting back above $90 per barrel in the first part of 2024 before slightly coming off that, but they are anticipating strong oil prices, which when we think about planning and what we can expect here in North Dakota, take all of this into account, and things look optimistic that we're going to have a strong situation to keep activity rolling here in the state. No new news yet on gas plant announcements, but again, as I've mentioned many times, those are in the works. We know that today's fleet of gas processing facilities will not be sufficient long term. Bumping way ahead, I'm going to keep Bridget on her toes here. Bumping to slide 18, those northern border movements still just north of roughly 80% market share from the Bakken. That continued trend downward for those Canadian molecules, and we have seen lockstep with that increasing BTU numbers. So we're now well above and sustaining above that 1100 number. Again, no announcements, nothing behind the scenes that I'm aware of, but again, we just keep an eye on this. We know how it's been a topic in the past, and we shouldn't be surprised if it becomes a topic again in the future. The one thing I will mention, there's been a lot of chatter here the last day or so from folks calling and reaching out and want to know what's going on. So the Mandan Marathon Petroleum Refinery, to my understanding, I've not seen a formal announcement from the company, but other information and getting a visual look, it appears that the refinery is temporarily offline. There's a number of different sources, trade sources that have tried to speculate or dig into what exactly was going on. I don't expect it to be a long duration outage. So when we look at North Dakota's product pipeline systems, this is not something that we typically dive into in these formats. But North Dakota has 3 major refined product pipeline systems. There's a 4th on here, the Cochin that you see. It is technically a product pipeline, but it is not in the same sense, does not carry gasoline or diesel. It carries diluent for oil sands. So we'll ignore the Cochin pipeline on this map for a moment and focus on the Cenex, the CHS line, which originates just west of Billings at the Laurel refinery. Comes up, it has a terminal at Glendive. And so when you think about the western half of North Dakota, Glendive is a major terminal where trucks can go to the racks, pick up product, and then deliver it to locations all around western North Dakota. It then comes up to a terminal in Minot and then continues to the southeast to a terminal in Fargo. Fargo also has the Magellan pipeline system, which is carrying product primarily from the Twin Cities up to the Fargo and Grand Forks terminals. And then the purple system that you see on this map is the New Star pipeline. And so the New Star, it's a large integrated system, but in North Dakota, primarily fed that west to east line from the Mandan refinery, goes across to the Fargo Moorhead area, and then continues down towards the Twin Cities. The segment that you see moving from the south to the north, for those of you in North Dakota, if you travel along the interstate just west of Jamestown, you'll see the white storage tanks. That is where that pipeline system comes up, terminates, and again, locations where truck racks are available for product availability. So from discussions I've had, a number of discussions already today, I'm not hearing any news about any type of shortages or issues associated with any type of maintenance going on right now. So for the time being, things are running largely as expected. Refineries like this, when they do go offline, typically what they'll do is they'll run extra runs leading up to any type of outage. They'll then have that product in storage to help buffer some of that outage. Same thing on the crude oil side, inbound. They'll do the same thing. They'll utilize storage to the extent that they're able to, and then once that system is back online, then start to work off those inventory levels. 10 or so years ago, this would have been massive market news from the crude oil side. Anytime in the past that we saw any type of regional shortfalls in refining capacity, it would cause a severe ripple effect in the pricing and what the state of North Dakota, the royalty owners, the producers, the crude oil system was so fragile at that time. I think this speaks a lot to the robustness of the pipeline infrastructure that's been built out in North Dakota over the last decade and a half. That news like this is largely things are going to continue to roll and very little disruption so far that we're aware of. Slide 21. It has been an interesting time in the refining market in the U.S. as a whole this year. There's been a whole host of different outages around the Midwest and around the U.S. And I just pulled this up for reference. This is through the end of September, so this does not include what we're seeing take place. So PADD 2 had already seen some weakness in refinery utilization rates. There was the Flint Hills Pine Bend refinery out, the Whiting facility, another one in Oklahoma. Gulf has seen some. You can see the PADD 1 on the far left in blue is down at relatively low levels of utilization. And so the U.S. as a whole, the refining complex has had a struggled year. If we look at slide 22, this is the inventories. Lynn was covering some of the crude oil inventories. The gasoline and distillate or diesel fuel and jet fuel inventories do not look any better. You can see them at the low level of those 5-year averages. And so there is not a lot of slack inventory in the U.S. system due to a number of reasons. One of those being, at least this year, a lot of challenges on the refinery operations. So with that, as of right now, things appear to be running very well. If any of that changes, you can certainly reach back out, and if I learn anything new about any challenges, either locally or challenges on these pipeline systems that supply product to North Dakota, I'd be glad to answer any questions if that arises.
What are those refinery challenges that you just mentioned?
Which ones? I'm sorry. So,
Like just a lot of, you said like a lot of them are out because of challenges. I'm just curious what those challenges.
yeah, they're great questions. For those of you online, the question was related to what the specific challenges were. Off the top of my head, I'd have to go back. I don't have that answer of what was taking place at Flint Hills or Whiting or any of those facilities. But typically, you've got two different scenarios. One is routine turnarounds, which get planned every so often to just take a deep assessment and deep rework of the refinery complex. And then you have unexpected outages, which you may or may not have some type of lead up information about. And so I suspect that's what we're seeing in Mandan, which was something where there's a short-term window of time where we're able to react and get things corrected. So to my knowledge, this is not any type of emergency situation. It was just something that had to be addressed. And in North Dakota, when you operate any refinery in a cold climate, it doesn't surprise me. Any work that needs to be addressed needs to be done quickly before winter sets in, because you do not want to have a refinery go down in the wintertime and have to work through the restart of a cold facility like that.
Question about the Mandan refinery.
Yeah.
Is it all gasoline or is it some jet fuel? Do you know the mix?
Yes, so the Mandan refinery, it is a light sweet crude oil refinery. The output products, you have your gasoline, diesel fuels, jet fuel are the primary outlets stream. So that Bakken barrel works very, very good on those light end products, the gasoline and diesel fuel components.
Third, or you know, or
I have those notes, but I don't have them handy. Yep. Yep.
said there right now there's nothing on the drawing board that you know of for any construction of natural gas plants, right?
There are so the question was, what's out there in the natural gas processing world. There are companies looking at expansions and new processing projects. So I do know of discussions taking place, but nothing public at this time. Yep.
So that's where they're at, discussion stages.
Discussion and planning, yep, but nothing yet at the regulatory side. So.
Can I ask you again about getting natural gas to the valley? Any update news on that?
So the question was related to natural gas movements to eastern North Dakota. Still very routine weekly conversations. I had another call earlier today with a company looking to do that. So the conversations are going. It is challenging, but nothing really earth-shattering or new at the moment to mention. So. Okay, well, thank you, everyone.